welcome to today's extensive weekend video, which will be very fast, but still packed and covering all the asset classes, together with prospects, what I see unfolding beyond equities, US dollar, bonds, crypto, real assets. So, this is going to be starting with Friday's S&P 500, where we had two intraday lows being retested. They held. I was clear to clients that any China standoff relief news would be met with initial selling, and those news held, and we are at contentious weekend negotiations in Switzerland. In real assets, they have behaved very well, so trading signals clients, that's the number one option on the joint page, had been reaping rewards through silver outperforming gold and oil closing very comfortably above 60.50. And copper, it's kind of midway, but it's showing signs of springing to life. China delegation walking out, that's not what the US and global recession fears to be alleviated can. That's not what stock market bulls want to see. EU, another key trading partner, taking the US to World Trade Organization and threatening countermeasures, kind of not happy with the progress of trade talks. This is another thing that stock market bulls don't want to see. US dollar had clearly returned above 100 based on the announcement about announcements. You can call it with quotation marks any way you want, but having a deal framework, mutual agreement, whatever you call it, this with UK only is not sufficient, and further trade deals and ratcheting down the tariff wars must come for the US dollar to return and break above the key 100 to 100 zone, which I had been clear is in the buyer's side necessary precondition. That would mean tailwind behind the stock market rally, and stocks are consolidating around below, that's more precise word, the 200-day moving average. So, which way does it look, as this level roughly corresponds to the blue line, which is 50-week moving average on this weekly chart. We have seen an inside candle and initial opening attempts to get above that level had not been successful. So what does market breadth readings, what does advanced decline line and advanced decline volume say? Would and should one be concerned? Looking at the sectoral perspectives, this is still rather clear risk on view. So bear this in mind when looking at the full weekly perspective. The daily chart. We had seen a consolidation and no steep selling of the bringing down China or tariffs to a more reasonable level, which would feel better as per the Trump tweet. I'm not using the correct word that he used, but never mind, the sense is the same. However, we must see a palpable progress. It would not be that fast that a tariff deal framework would be attained closed over the weekend. Not really, but we need to see positive vibes, and thus far we are not there yet, just yet. The daily perspectives, they had been slightly erring on the risk off side, thanks to tech, I would say, and pay no attention to communications on a daily basis. It's more important that still we are seeing this consumer discretionary outperforming consumer staples, and then have a look again at what does Tesla chart do. And energy, that is quite clear if you examine the daily chart and the daily performance of crude oil. And real assets are the beneficiaries of any trade wars being ratcheted down. So much for the distinction between paper assets and commodities as we go forward. I'm saving these further thoughts being developed for trading signals clients. DAX, clear bellwether, and it's pushing higher, making higher lows, and slowly making higher highs. So this is boding well still for risk taking, but then again the Europe-China situation is somewhat different from the US-China situation for understandable reasons. The daily perspective, switching over to 15-minute chart. This 15-minute chart shows that following the initial news about appropriate China tariff level had been bought, and it was only after the opening bell that stocks declined. However, they had held this level, and I would not say that they had closed on a bearish basis. And would it be an understandable positioning to go into the weekend on a short side, with short exposure, or would some kind of an ultimately positive news be expected to come out? And note that I'm not bringing up India-Pakistan geopolitics. Thankfully, there have been news about ceasefire, so let's hope it sticks. Turning to VIX for further growth as regards volatility, we see continued decline, and I've been adamant that this is the path for volatility to go forward, and that it would be coinciding with the S&P 500 basing with a bullish tendency, but it's not yet ready to overcome the 200-day moving average, and definitely not on the first try. That has been the subject of my midweek. Let's put it like this, and looking at my favorite volatility metric, which is VIX to short-term VIX, forward-looking VIX, we see that the picture is the horizon is not as clear as VIX itself would have you believe. So pay attention to this chart as well, that it's not just going to be smooth sailing going forward, and here the positioning is a bit more guarded, and it corresponds as well to yields somewhat rising. Note the bump on the day when the UK framework mutual agreement intent had been announced, and Friday no meaningful decline in yields, whereas short-term yields are starting to rise, which is not exactly what markets want to see. They would love to see some kind of progress when it comes to the tariff deals. But are we seeing a panic in the bond market, or there is still conviction? This overlay will help you answer that question precisely, but I wanted to drop a few words as well about bond market volatility. I will be developing the prior thoughts and everything what I am rhetorically asking here within the client section, be it in the daily analytics or dropping a few clues in the intraday channels. We are seeing bonds being reasonably sanguine about the prospects of a trade deal, so that's what they want to see. Coming back to clear winners, when it comes to Bitcoin, I was clear that at the 85,000 level it would break to the upside and we would see continued outperformance, and strategy is one of those plays how to enjoy Bitcoin gains, and this is precisely what had happened, and the positioning in this asset in cryptos is still on the bullish side, so pay attention. The same goes for the already mentioned silver turn to the upside on Friday, outperforming gold, which had been knocked down quite steeply on Thursday, given that Chinese investors are still buying, and central banks, you know what they are doing when it comes to crude oil. It's I respected the Thursday's very positive turn in the way that I moved to the range by at least $1 higher to the upside, so the closing price prediction had been comfortably beaten, and the close above 60.50 had clearly been happening, and we are seeing good moves in oil stocks, which had been the message of the preceding week, made to clients that there are very good plays when it comes to dividends, and I mentioned a few of the leading players, for example Chevron. When it comes to copper, we are seeing some kind of budding recovery, and it's painting positive sign, and I like commodities here, and I think they would be giving out increasingly better vibes in the weeks and months ahead, because remember Fed's caution about the inflation story. We know what kind of an effect tariffs are having when it comes to actual consumption, and what it does, not just the prices, but the impact, which is actually quite deflationary. My joint page will help you select what's right for you based on what and how you trade. Make sure to combine the daily analytics together with premium intraday channels, and have a great weekend.